It's the weekly 30-30 trading list. We're finding the best momentum companies on the ASX and identifying the companies that are set to run. We're doing this with Gary Glover from Novus Capital, who's been through the list and picked out his favourites for the week. Good morning, Gary. How are you?
Yeah, I'm good, Chris. I'm relieved today, actually, because the market's sort of up, and I was definitely sort of geared to the hilt there yesterday. I was sort of, I'm just glad the market's up, because I would have been otherwise I would have been stopped out on a lot of positions there if it had got whacked last night. So I'm happy. So let's get into momentum stocks.
Momentum stocks. So the list is broken into two. You've got the top momentum ones that we've got over the quarter, and then we'll have a look at those that maybe set to run looking better on the weekly side. CAU is the one that you've got here on the chart. That's one we've seen many times. How's that looking? Yeah,
so number one on the quarterly momentum. So pretty obviously showing some definite sort of strength here so far. So good volumes all along the way. The only thing to sort of be careful of now, this is sort of like a little 1, 2, sort of 3 thrust sort of high there. So I prefer them to sort of sit on top. Like if that sat on top of that move, I'd feel more comfortable. When they overlap, I don't really like them overlapping there. It's sort of, they're sort of, what do they call it? Like a broadening top. Has this sort of overlapping to the top there. So I don't really like to see overlapping tops, but that's the only thing I'd be cautious of there. But has been pretty strong. I don't know if I would be chasing it here. I'd be probably wait for a consolidation or something there, but I'd just be a tiny bit cautious of that one. I think TIE was the one, number 2. Nice little pop out of the range. Yeah, I think this was on our list last week, but sort of really didn't really give us there's no real signal in there, no sort of congestion, or just went straight up. So hard to trade those. Tyro was pretty interesting there. I managed to actually trade this one a little bit, and love these little tight consolidations there. Just sat on top of that previous high. Love to see these congestions there. And then once it started to break up here, booked to right here. I got a bit lucky here, Chris. I actually ended up sort of getting up. I think I got out actually on the pretty early on this. Not because I sort of wanted to be out of it. I just wanted to actually get into some other stuff that was sort of, I feel like the market was getting pretty close to a low here. So I really wanted to get long some of my preferred stocks here. But yeah, that was a little bit of selling on that day there. That's a little bit of a concern here. Just to me, this is not one of my preferred sectors, even though the numbers are pretty good here. I know this is potentially under corporate. So far, it's sort of held above that high. So that's, if it can sort of sit on top of that high like it did the last one, not go below that level there, that will be a pretty good sign. So you had the 1 day down, which is a bit negative, but then since then no volume. So that's actually okay. So if we can just sort of hold here above that high, that'll be constructive. But yeah, does need to do that. What else was in there? CTT was interesting actually. That was sort of little VCP in here, really sort of pull back here, back in the range here, nice little, so this is basically correction, sort of decent range. This range here is less than this range, and then we get this little sort of shimmy in here, and this is all pretty light here. As much as, look at that day there, that's a big range there, but no, not much, not huge volumes going through there. Pretty tight in here. So breaking above that little, to me, sort of breaking above that high there would have been a good sign here. So whether this day or this day here, definitely would have been a good little figure there. Actually reminds me of the
B wave that you look at.
Yeah, it actually looks very similar to, it just reminded me of 360. It's almost identical to 360. So that sort of actually, correction, sort of tight, nice tightening as well here. So a little VCP pattern as well here. So just breaking above that high is pretty good. So yeah, that's the sort of stuff that's the sort of charts I like to see actually. So yeah, that looks pretty good. Don't know about the stock here. Not one I'm a fan of there. I think same sector as Temple and Webster. Again, sort of showing similar characteristics. Again, it's been nice and tight in here. So But yeah, maybe just ones to keep an eye on there. PRN was on the list, but it's had a pretty strong move here. Did have a bit of a breakout the other day. That was sort of, did break to a new high there. So it's sort of like your little congestion there. What do you call it? Little tight flag there. And then breaking to a new
flag.
Yeah, breaking to a new high in this day is sort of, that would have been, I mean, that's sort of what Davis would refer to as a breakout there, sort of going to, showing relative strength in a pretty bearish market, breaking to a new high there. So that's normally pretty bullish there. So he'd be sort of probably buying that breakout there, maybe a stop in sort of somewhere under here or maybe a bit further back. But yeah, this is normally that's not a bad signal. It just looks a little bit elevated, but as we know, these sort of momentum stocks got a habit of keep on going there. What else we got there? Karoon's sort of interesting there. Sort of had a nice rally, bit of a pullback, rally back up into the range again, just pulling back again here. So this is one for me just to put on my list. Maybe we'll get a little congestion pattern in here, one to watch. Might go through a little period of consolidation. We mentioned actually Mesoblast there last week. I sort of said that don't rule this stock out. Actually, it was looking pretty interesting to me. The volume through here was pretty decent. It's sort of, my only fear with this one, Chris, is that every time the stock has a good run, there's a capital raise coming around the corner. So that's the only one that's the only thing that makes me nervous about long here. But I do like this sector. Definitely think biotech. I mean, biotech's one of the leading, basically showing showing relative strength in the States at the moment. So I know a lot of momentum guys have earmarked that sector, and they're over the last sort of 2 or 3 weeks. A lot of the biotechs have held up pretty well. We saw Amgen, I think it was the other day, had a big jump up out of the range. So some of medical, biomedical stocks were definitely showing some strength in the States. So definitely a sector to be keeping an eye on here at the moment. But yeah, that's not a bad sign. They're actually going through there. Maybe might congest, come back, sit on top of that old high there. Not bad volume up here to see if it sort of congests back into the range, but definitely one to keep an eye on. Probably wouldn't go too hard just because of who they are. DVP, another one that's sort of been building there. Little BCP, which sort of got going, a little congestion there. We talk about, I mean, look, what are we seeing there, Chris?
Well, it's that volume, it's just disappeared.
Yeah. So we're sort of, we're starting to kick up here, got some volume coming in here, but a little pull back here, no volume there. So it's so far pretty constructive. It's a little messy there, but it is a bit of a messy market. But that's sort of, I'd say that's kind of constructive. Paragon was one that had that big jump again, another in that biotech space here. This is Paragon's like a repurposed drug there. So normally like it's approved drug already, but they're using it for another purpose. So it's a little easier than some other biotechs in terms of sort of getting approval and stuff there. But pretty impulsive. This has probably come back a bit too much. You don't really like to sort of see them come back. You like to sort of see them, nice and a bit more sideways, a bit more congestion.
Hold higher in the range, right?
Yeah, look, the volumes are light. I mean, that's gone up a good volume, no doubt about it. But then it's just come off back into the range on. So it's okay, but it's just not. I prefer to sort of see it tighter. It's not, doesn't it? Doesn't excite me. I mean, I think we talked about what do you call it? Tyro having that sort of tight range here. Look at that. Look at New Zealand. Just look how tight that is. That's what you want to see. You want to see these tightness and ranges here sort of struggle to go down. So impulsive, corrective, impulsive, corrective. Impulsive, corrective. That's what you're looking for. That's the one thing sort of McLaren sort of taught here, was just understanding, what is an impulsive trend and what is a corrective trend. So impulsive basically sort of will sit on top, and the corrective will basically be overlapping. But this is all, so we want to see those corrective trends because fast moves come out of them. So that's what we want to watch there. Polynovo was back on the list here. So few people were sort of commenting on this one because it's sort of one that we played this last rally here. Wouldn't say I definitely didn't trade it as well as I should have there, but end up still being a good trade, but could have made a lot more money out of Polynovo the last leg up here. But this is still showing relative performance here, so probably one just to watch here. Maybe it might sort of build here. Did see, I'm pretty sure the CEO or one of the directors has just been adding to this as well, so that's always a good sign of the insiders buying more of their own shares. What else is on there? Qantas had a pretty big jump. Bit of an upgrade here. So look at this sort of selling. I actually had some sell orders up here for clients I've been holding for a while, but I rang them and took them out because I just think, oh, this could be, this could be the start of a bigger move here. So breaking here, I mean, look at that. That's again, we've sort of got this sort of congestion in here, so you might get a little cup and handle in here. Something, it's just it's not a sector I normally want to warm to here, but just it does feel like this is getting some legs here. People starting to travel. I mean, the airlines, they're keeping it pretty tight. They're probably not releasing as many because of staffing issues. They probably get less flights than they're full, and they're charging more. So, I mean, they're making some good dollars here. I know people will be crying out saying it's not fair and they shouldn't be doing that, but mate, they've bled for years. So, yeah, just initially they're going to make, they're going to keep the flights less and the fees high, and then once things really open up, then you should see price normalize. So for those who want to get cheap flights, you just have to probably wait a while. Those who want to just travel, you're probably going to have to pay up. But can't tell me that there's just, everyone wants to go on holidays, Chris. So everyone wants to travel. So the update was really positive. So I just think, travel sector is, you just look out there. I think you're going to get momentum there, some good news there across that board there. So
we did hear reports for the last school holidays that the Queensland tourism, a lot of them were saying it's the busiest they have ever been because they've got the backlogs of everybody rebooking for 2-3 years. So they've never been busier.
No, that's right. And it feels like it's going to stay that way for a while as well. It's going to be, some momentum there, pent up, so yeah. And that means also you get a bit of a run, but also you get a flow of news. So markets get news driven as well. So, if there wasn't sort of, feel like you're going to get some good news flowing here, which will, drive those share prices probably higher than they should go. That's what markets do. They go lower than they should go, and then when they get momentum, they go higher than they should go. So just looking for some momentum there. Okay, so looking at the weekly launch, so a bit of a mixed bag in here actually, in terms of what's sort of moving weekly. Definitely some sort of smaller resource stocks here, so which obviously has been the case there. NET sort of number one, probably too small for me. RNX pretty small as well. Lake Resources there. Now normally I go, this is one of those stocks I might try and avoid here, but gee, look at that chart, Chris. Here, there's our first leg down. So this is our, BCP. Pull back here, second leg down in here. Probably the same size, maybe just slightly less. Bit of a bounce in here, and then look at that little tight congestion in there. So you'd want to, isn't it? Yeah. So this is a nice little VCP in here actually. So probably this is probably more sort of sidewaysy in here. This is probably slightly more downward oriented. This is what I sort of talk about, when you see sort of sideways or sort of,
where you say corrective in time and corrective in price?
Yeah. So something that sort of holds up. So if it holds up sort of, if it doesn't come back, this has come back a reasonable amount. So obviously, if you overlaid your Fibonacci, so this has probably come back, 50 to 61.8% of the range. So that's come back a reasonable amount here. Whereas this has been pretty tight in here. This has probably been a bit tighter, hasn't come back as much. But still got a VCP in here, and we've still got some good, some okay volume in there too. The volume up there, some good volume, buying volume there as well, and some good volume through there. So this is actually okay. Volume dried up in there. Volume has sort of dried up through this last phase here. Bit of a pop up here, and what's happened here the last, 1, 2, 3, 4, 5. No volume there. So the selling is dried up as well. So this is going to sort of roll over and sell off here. It's not sort of showing signs here. So yeah, this, for a stock that probably I would normally stay away from, this one's actually catching my eye, and I'd be looking for a break above that little mark there. So if I saw something impulsive here, so I saw some volume come in and we break above that high there, I'd be tempted to, I mightn't go the full position size, but yeah, it definitely looks pretty, that's a good looking pattern there. So thought that one looked pretty good. Some smaller ones in list here, so probably just too small for me. One, IMA, again, a little pop on volume, so not too much going through there, a bit too small. POS, another small one. So a lot of these sort of are smaller ones here. This one I like. Okay, so again, we've got a impulsive move here, RAC, and so this is in oncology. So again, in that medical space there, so nice. So this is really, look at all this sort of tight congestion in there. So starting to break up here. You could say maybe we just started to break above that high there. So what was our, so 204. So really, if we saw a close above 204, or we 205 there, well, that, that's the sort of stuff we look for, and then we've had a bit of a bang here. So like the sector which is basically getting interest showing relative performance, nice tight congestion, probably, this is, look how long this has lasted, 1, 2. That's, sometimes you got to wait a month or two for all these good signals to. That's the thing about trading. You got to be patient. You got to wait for these good trades here. So, but that's not bad. That's actually quite good. So, interesting sort of stock there. SRX. This is probably new float here. So come off here. Just probably want to keep an eye on there. Just didn't mind the volume in here and the dry up here, but probably too early. But definitely one to keep an eye on. EYE, again, sort of in that medical area. I think this is sort of a glaucoma group there. So one that I have sort of watched here in the float there, just because it's a recent, did sort of come off the float, went down a year low, just starting to build here. Gone above a bit of a high here, some okay volume in there. Just, bit hard to trade, but is an interesting sector. So definitely one to keep an eye on in that sector there. Just, like a lot of the medical field has been sort of hamstrung here with COVID. I really think that's an area that can have some headwinds for the next couple of years. So all the rest of them are pretty small. Again, pretty small again. DBI. Again, this one's, it's a bit hard to trade there. It's sort of gapped up, so bit messy. Dalrymple. BSX is one that actually is sort of tightened up here. So it's had a bit of a pop out of the range there. Some okay volume and then sort of congest back in here. But yeah, just one to sort of keep an eye on. Just a bit of a tightening up here. Probably like to see it a bit more sideways, but maybe too small for me. I think what we got, Elmo was on the list there, ELO. Again, a bit like Nitro there. This is what it was, a bit of a darling in that sort of tech sector. It's had a bit of a gap up here. So this is sort of one to keep an eye on the list. I think NTO was so Nitro. So that's the other one that's actually holding in quite nicely. So that's sort of in that tech sort of sector. So nice and tight there. So yeah, it's a few in that sort of technology area looking okay. This is the last one, NC1. Look, again, pretty deep here. Again, too small for me. But that was it. There was a few stocks there, a few on there. I like that RAC looks pretty interesting. That's a good little technical pattern there. The LKE, which is Lac Resources, which is a stock I probably wouldn't normally want to trade there, but that pattern does look pretty interesting. So yeah,
That's an interesting one with LKE, because in that lithium space, if you see on the chart, the VCP that it came out of sort of that October through February, and then the one
yeah,
before that's to the left in the year,
yeah,
the
yeah,
year earlier, that whole group, when they started breaking out, one VCP would then trigger another and another, and that ended up going on for in 2021. That went on for 2 or 3 months, where they just kept triggering each other's VCPs and breakouts.
yeah.
But at the moment, you've noted in some of the other previous videos that there are some lithium companies that are trading in that top right space and already rallying. So
Yeah, some of them had some big moves on that, like what PLS is
exactly
what's
that one.
What's Liontown LTR in it?
Yeah.
That's so yeah, that's yeah. So some of them have had some pretty big moves there. So but yeah, it's been a hot sort of space there. But
The market still gets behind them if they get the momentum going. So
yeah. PLS has been pretty much kind of one of the amazing ones there. Obviously, we've still got our sort of our Whitehaven stuff there and New Hope there. So still sort of congesting here. Still volumes are still sort of starting to seep out here. Have noticed that some of the coal prices in the UK and stuff started to sort of cool off. So so some of those charts are sort of showing coal here, but yeah, you might just get another little congestion, little pause there. Still making plenty of money in Oz here, but again, I think this is still got to be careful with this. One's just Jesus, look at those, So this is so late stage here, I know, but something happens there. Things change, the market looks ahead. Yeah. So yeah, just be careful there. So look, probably run a bit longer there. I think I'm looking for a denomination of that low there, which is probably the end of this month. Will be the first date there we watch here. But yeah, just either or, just if you're long here, then that's fine. Just make sure you'd run a stop here. Just the problem you got there, Chris, is look, it's just that, And the thing about vertical markets is when you know how they finish. So you don't. Sometimes it's the trickiest thing is actually is when they come to an end. But when they do come to an end, they do all end the same way. That's the part there. So they can move higher here. I mean, these inflationary sort of periods, you sort of if you go back and look through those 70s there. I mean, energy had some massive moves. I mean, there was some 100, 200, 3%, 300% moves in those 70s. With the energy sector there was some very big declines as well in between, and obviously precious metals pretty big, and then value stocks can move as well. So that's the sort of thing I'll probably have to go back and look at here now, is sort of go back and look at those sort of 70s and the 40s markets. Everyone's pretty bearish here still, even though we've jumped up last night. Everyone's still thinking, oh no, this is inflation's too high. Fed's going to have to be aggressive. Everyone knows now. So it's all the news is already out there. So we had a big pop last night because everyone's sort of so short here. Everyone was so negative. Everyone's positioned. So it's again, you're sort of anyone who's short was already short there. So it's just a lot of cash on the sidelines here as well. So interesting, we got a big jump there last night, and every commentator I've heard this morning is, this is just another short covering rally. Yeah. Don't, so I thought, okay, that's really good, because if it does sort of continue to go higher here, then everyone will be hesitant to get in. And then if you continue to rally, then it'll be like, oh shit, what do we do now? Then you get FOMO, sort of a fear of not, then you get fund managers who are sitting in too much cash and the market's going up, then they have to participate. So this is what sort of causes these quick moving markets. And that's the thing about the 40s and the 70s. You look at those charts there. Some of the swings in markets are massive, but so Stanley Druckenmiller might be right here. We might have a decade, or what I think was it 5 years or 7 years, where we don't see any gains in markets. But you may not see any gains at the end of that 5-year period, but in between you'll see massive moves up, massive moves down, massive moves up, massive moves. That's these sort of lower growth markets have bigger moves, have bigger volatility, have bigger movements in the move. So those, that's the thing here. This could be a trade market. It actually could be like a cracking could be like a good covered call market, like an options, right? Because it's sort of like, you're going to get just volatility, back and forth. So we're sitting in sort of, sitting in some sort of good quality industrials that pay you a bit of a dividend, and then they pop up, you write a call, they come back down again, they pop up, come back, write a call. It's just, write a put on the downside. It sort of could be up and down, up and down, up and down. It could be that volatility could be really supreme, but I'll post some charts actually on Tuesday. But the thing about those charts is, Chris, is that the volatility isn't short-term orientated. So it's not like we're up for a week and then back down for a week. It's some of the moves they can rally for months. They can almost rally for a year sometimes, and then they go into a decline for months and another year, then rally for another year or for months, and then decline for months. So we're not sort of going up for, say, 3 or 4 weeks and then back down for 3 or 4 weeks and back up for 3 or 4 weeks. That's not what those markets generally do. They tend to rally for months, and then they decline for months, and then they rally for months, and they're big moves. They just, you look at it, and think, how the hell how the hell do you trade those markets? Or how the hell do you sit through going up so much, and then I'm down so much, and then I'm up so much, and then, so you cannot sit, I'll say this, I reckon this is an obvious statement, is that if we are in a high inflation environment, you cannot sit in you can sit in a portfolio, but you'll underperform because that portfolio will sort of go nowhere. So if we are in a high inflationary period, those assets will probably sit still, but they still make earnings, still paying dividends. You have to be long assets, because if you're not long assets, the cost of living goes up and everything else. So price of properties will climb, not super strong, but they'll still hold. Still making income on those assets. Your shares will hold. They'll go up and down. Like might even go slightly up, but you'll still get paid your 4 or 5% yield on those stocks every year. That's why if you look through, I think through the 70s, I think value stocks were like the 3rd best performing sector, and they average around 7 or 8% through the whole 7 or 8 years. So still had a pretty good return throughout that period. So you still get a few capital gains. You do get your income and a little bit of capital gains as well. But what we just saw was just volatile, big volatile markets here. So it's going to make it tricky for those who sort of don't like volatility. But for those who love it like me, it's going to be, we can have years of fun here. The problem is we'll sort of see is that high inflation is just not good for anyone there. We were just discussing the inflation numbers of the 40s and the 70s, and the numbers are pretty,
brutal.
Yeah. So I mean, we, in 41 we had what, 5.1, 42 10.9, 43 6, and then we dipped for a couple of years. So we had 1.6, 2.3, then back in 46 we're back up to 8.5, 47, 14.4, and 48, 7.7, and then it dipped again, 49 stayed low. But
that erodes a lot of purchasing power.
It does, yeah. In the 70s was exactly the same. So 73, we went from what being 3.3 to then basically doubled in 73. Then 74 were 11.1, 75 9.1, 76 5.7, and 6.5, 7.6, 11.3, 13.5, 10.3. I mean, you got a little bit of a dip. You sort of went up for a few years, had a dip for a couple of years, and then like the second wave again. But geez, that's damaging. Those are sort of, and that's looking at least 50% likely.
Well, what some who've been around noted was that second decade that you talked about, the late 70s there were times where the unions were looking for wage increases of over 10% each year, and that's really baking in inflation. It's hard to come off that rotation.
That's right.
It's self-perpetuating, isn't it?
Yeah. I think the days of sort of what's his bloody Alan Joyce getting a $3 or $4 million pay rise and then knocking back a 1% pay rise for his staff. I think those days will be long gone. So we'll have, you won't be able to get away with that sort of stuff. You'll have to basically, everyone will be taking haircuts across the board. top line management, and then all the bottom end of the market will be sort of, they'll be sort of on higher. We'll have to sort of keep bumping up the minimum there just to sort of keep up with what's happening here. So just, look, hopefully inflation can cool off here, but it's not a good sign here, the fact that we're hanging on here. It's sort of, it's looking more and more likely now that we're going to go through maybe a 70s or a 40s sort of style of high inflation there. The 40s was a little bit less brutal. The numbers were a little lower, so we'll probably I'll have a good look at that. That hopefully will be more like that rather than the 70s. And there was some relief in the middle of the 40s as well. I think we had 3 sort of big years, and then we had 2 years that was really low again, and then we had another 3 big years, and then that was it. Was all done. So we'll go back and we'll look at the 40s next week and the 70s just to show you what markets did actually. You'd probably be surprised actually how they trade.
Well, that's probably a good note, because you'll also no doubt look in the portfolios, which is the Tuesday video. So we might wrap on that, Gary, and say thanks for the charts, and we'll come back in on Tuesday to understand what's happening in the 40s and the 70s and the portfolio. Yeah,
that's right. We just have to probably tweak our view a little bit there. So I was hoping for a bit more growth here as inflation subsided, but if inflation is not going to subside, then we probably just need to be a bit more value. Even precious metals, Chris, as well. That's the gold stocks kind of one to keep an eye on here as well. So interesting stuff. But we'll keep everyone covered as we do some more homework and research on those on how markets sort of behave in those sort of trading periods and those trading conditions.
Yeah, I'm looking forward to it. So we'll come back then. As Gary mentioned, his Tuesday report, you can click on the right hand side to see that playlist. And then also on the right is some breakdowns of the strategies and summaries and market approaches and analysis that Gary's often talking about, whether it's volatility, contraction patterns, or the things like the 60-year cycle there on the right hand side. And we'll come back again next week.